has been bullish on India. We have Adrian Mowat now joining us from JP Morgan. Adrian, good afternoon. Good to have you on the show. What's spooking the Asian markets today, including India? And do you think it's in buy zone right now, or would you expect the momentum to actually take the market even lower before it becomes a better buy?
Yeah, so I think there's a number of factors at work here. We've seen generally weak economic data. Notably, we had a poor PMI print out of China on Friday. So the decline in commodity markets has accelerated. Very, very close to an Indian heart, the price of gold has been falling. As well as, broad bulk commodities, copper at a 5-year low. So we started the trading day with pretty poor sentiment. And then in China, the market closed the lunchtime session down about 2%. But as we came into the afternoon session, we began to see the market selling off pretty quickly. In these situations, it's often difficult to work out what is going on, what's sort of driving this. But we do know that economic data was poor. There's some concerns over inflation. The price of pork has been rising notably in China. Market participants were worried about the IMF recommendation that China unwound its support operation. And clearly sentiment is quite fragile in the Chinese market after the correction we saw over the last month. And there is a fear of the overhang of the stock that was accumulated in the support operation coming back into the market. It's also true to say that some of the more speculative stocks in China had bounced 30-40% from their recent lows. And so there is some money to be booked, some profits to be booked. So these are the types of explanations that have been given for the market being limited down today.
Adrian, hi, afternoon. So far, for the last many weeks and months, India would always benefit from a fall in the Chinese market. But now a time has come where it seems to be a global rout taking all markets with it on the downside. So what does an Indian investor do? Do you raise your cash levels, or do you use this as an opportunity to increase allocation?
So I would use it as an opportunity to increase allocation. If you look at the conditions in India, we've got a gradual build-up of economic momentum. We have the possibility of, once the Fed moves rates, and we expect them to move them in September, we don't believe that will result in an outflow from emerging markets. We think the positioning bearishly in emerging markets has happened prior to the Fed move. And so when the Fed does move, you're more likely to get a degree of short covering, and that the currency pressure that people fear will not emerge. And that'll make it easier for central banks in places like India and Indonesia to start to lower rates so that real rates are at a more accommodative level. So when I think about India as we go into the final quarter, it's probably going to offer us accelerating growth and a lower discount rate. And normally that's very supportive for equity markets.
Okay. Adrian, great day to have you. We also have the market struggling with this whole P-note issue. Have you gone through that report? And, since you have a lot of FI clientele, what's the sense? Do you think there's a bit of a panic, or is this being overdone right now?
Look, we seem to, revisit tax issues, P-note issues every year in India. I'm not sure if I would judge this situation as more severe, more acute than we've had to deal with in, almost on an annual basis. I think let's just assume that the pragmatic behavior occurs, and this is not an overhang.
Okay, so you're saying...
But,
go ahead.
But I'm sort of intrigued. Do you feel it's a bigger issue than we've seen in the past?
No, not as yet. I mean, we are getting some clarifications from the government and from the finance ministry that they will look into it before taking a final decision.
Sonia, my question to Adrian was, Adrian, is this an unnecessary controversy that's actually hurting even more on a day like this? That was my limited point.
Yeah, look, these things don't help. What it tends to do is it generates a reason to procrastinate. So you've got some natural selling in the market, and maybe those that were willing to commit risk capital might be wanting to wait until they get some clarification.
Okay. You did mention that you would increase your allocation into a market like India. Would it restrict only to the Indian market, or do you think that there are other markets across the globe that will get liquidity despite slow growth?
Yeah, look, we continue to like the China market. China's 8 share market, so the Hong Kong listed stocks are on 10 times next year's earnings. If you take the banks out, maybe 13 times. So global equities are on 16 times. Within the 8 share market, there are lots of growth companies. The index has done a very good job of discounting the changes in the Chinese economy. And so I've got a market where the median companies forecast give 15% growth, and you're paying X the banks just 13 times forward. I think that's very compelling in these nasty days where you've got the A-share market falling rapidly, bringing down the H-share market. I think is an opportunity to add to H. There are interesting things in financials in both Korea and Taiwan. In the ASEAN region at the moment, we're generally underweight, although we continue to like the Philippines. And outside the Asian region in emerging markets, we would be advising clients to add to Turkey, to the Czech Republic, to Hungary, where there's lots of value there, and I think growth dynamics are improving. In Latin America, it's very tough. Brazil, the economy is probably going to have back-to-back recessions, 2015, 16, and the debt dynamics in that economy are deteriorating. Mexico, though, is interesting. If you look at macroeconomic data in Mexico, it is accelerating. But the Mexican peso is the most liquid emerging market currency. It's relatively cheap to sell forward at just 3% annualized. So what we've got going on in Mexico is a currency that's weakened substantially. But we think that's a positioning ahead of the Fed move. And once the Fed does move, you'll see short covering. So I think Mexico starts to become interesting as you get closer to September.
Okay. Let's get back to India then, Adrian. You did say that use falls as an opportunity to buy. But what about valuation? The Indian market is not cheap. And at the same time, we really haven't seen an earnings pickup so far.
No, we haven't, which does make sense, because if you think about the fiscal help and the monetary help, these are very, very recent phenomena in India, with the new government only having its first budget in March and beginning to implement that from April onwards. And we've only had modest reductions in interest rates, which started in January this year. So I think the economic momentum in India is at an early stage of picking up. So, it's going to be the earnings story for calendar year 2016 that will determine how well equities do.
So within the Indian markets, where do you increase your allocation to, Adrian? Because we're having a bit of a problem with leadership now. I mean, banks are under pressure, the IT earnings are patchy, and we've seen some of the quality spaces like pharma come under a lot of selling as well.
Yeah, so look, I think you've got to look at, where is it likely that you start to see a pickup in activity? So the urban consumer is benefiting from lower inflation. There's been a huge amount of pessimism, quite rightly, around rural consumption. We think that's going to begin to look better versus a relatively easy base. So some of the more rural focused consumer names, auto companies, we think you should be looking at this point. In terms of infrastructure, our preference is to go through building materials. And when you look at the cement PMIs, they have been picking up. If you look at coal production in India, that's also doing well, as is electricity production. So that, there's momentum moving there. We continue to like near cyclicals like the banks, which there actually has been sort of, I think the numbers coming out of the banks look okay, considering the weakness of the economy in the first half. And if we're right that the central bank will be in a position to start cutting rates once the Fed moves, then that's obviously going to be helpful for the banks. I think, as you quite rightly point out, for the IT space, it seems stock specific. But you've had one company coming out with a nice beat, and that obviously helped sentiment, and the stock reacted quite largely, in a large way, to that result, didn't it?
Okay. Well, just before we let you go, you have been one of the biggest bulls on the Indian markets, and we have seen the Indian market sort of stop and start in the last couple of months. You don't get any sense that there could be a big global correction coming purely because of the reasons you stated. I mean, China, inflation moving higher, slower growth. Don't you think that a price correction could be coming in global markets and that could drag India with it?
Well, look, I think to get a major correction in global equities, you would need to have an inflation shock out of the United States, which would be a catalyst for a much more aggressive tightening than is currently priced in. I think to say, we now have plenty of evidence of weakness in Chinese demand. We have had substantial declines in commodity prices. We've tested markets with volatility in European bond markets, with German bond yields going from 7.5 basis points up to 72 basis points. You've had a 30% correction in the A-share market. We've had a vote in Greece and, Brexit fears. There's been plenty of stuff out there to sort of challenge the nerves of markets. And I think it's quite interesting how, generally range-bound the bigger markets have been, and G3 currencies. In EM, we've definitely seen weakness, and, when you look at the EM broader index, we're almost at a 5-year low, quite a bit of that being, currency weakness. So, I think we've seen the correction in the deemed higher risk, weaker parts of markets, as in emerging markets. And I don't see a particular catalyst out there for a broader correction in US and Europe.
All right, Adrian, always a pleasure talking to you. Thanks a lot for your time today and talking to us. That's the view from Adrian Mowat, saying that any fall in India actually is a buying opportunity, for that matter, even in China, especially the H shares, which is the Hang Seng market. We'll take a break now.